Numbers out moments ago, beating on the bottom line and also on same-store sales growth, missing slightly on revenue. Joining us now to break down the numbers, Bob Derrington, Managing Director and Senior Research Analyst at Telsey Advisory Group. The stock is up 0.6% in after-hours trade. Bob, don't know where to start, but I guess we'll kick things off with the fact that they've reiterated their same guidance for China, despite the relatively high exposure to the coronavirus. What do you make of that?
You know, to be fair, I kind of make of it as a kind of a Hail Mary. You know, in the big scheme of things, they've closed half of their restaurants in China at this point. And, you know, the impact is probably going to be fairly substantial. Now, that said, you know, it's almost impossible to, really kind of quantify the timing at which, all of the stores come online, the impact to the company's business, the cost. Typically this company has taken the high road as far as, issues affecting their customers, their employees. Generally they'll do things right. And I think they'll take care of their employees. They want to make sure they come back and go to work once the issues are under control. And I think, to be fair, that's the right thing to do. Can you quantify that? I don't think so. My suspicion is that this quarter, in China will be heavily lost. Here we are at, it's a March quarter, the second fiscal quarter, and we're at the almost at the tail end of January. I would expect that, most of this, problem would probably run its course over the next roughly 30 to 60 days.
Bring it back as well to the core same-store sales growth, whether that's 5% internationally ahead of 3% estimates or 6% domestically ahead of 5% estimates, given that the stock, of course, has pulled back.
Yeah, let me tell you, the comps were very impressive. There's no doubt about that. The global comp number up 5%, certainly better than, our and street expectations. The Americas was very strong. The international segment, that was a little bit lighter than I think what we in the street had expected. Certainly, China up 3, is a positive. But, my suspicion is that 3 to 4%, for the entire enterprise, especially for the company's business, may be somewhat of a struggle, depending on how long those stores in China, are down.
Where are you? What's your rating on? You were at hold, I think.
We rate the stock
lower price target.
We rate the stock as market perform. We have a $90 price target. Certainly, if the stock were to come under some heavy pressure, if all things would always be, reconsidered.
Bob Derrington, thank you very much.